Thank you for checking out Fieldman, Rolapp Associates Municipal Market Update for the week of October 4th, 2021. My name is Adam Bauer, and I serve as CEO and President of Fieldman, Rolapp Associates. Fieldman, Rolapp Associates is a municipal advisor to government. Our firm posts what we call the MMU, Municipal Market Update, at least 2 times a month. And this month, we actually posted an additional version because we saw so much change in the municipal market. So as we go into October 4th, there's a few things we should probably start off with. Equities are lower, which we've all gotten used to not seeing that. All we've seen is equities go up for the most part over the last, ever since COVID-19 shut us down. It seems like we have new records in the stock markets almost every week. We've also seen treasury yields increase, which is another thing that we've kind of got accustomed to, is seeing how low those treasury yields are. We're going to get into some of that and how they've changed. Finally, there's been a lot of activity in Washington, but there was a stopgap spending bill put in place that allows the government to stay open until December 3rd, 2021. And so with that backdrop, we'll now get into what we're seeing in the municipal bond market. Our first slide here is a AAA MMD, and we show you some data that really takes us back to 2005. So I'll start with the left hand of this chart, and that is the interest rates, and ranging from 0, and we have it going as high as 7. And then the bottom are numbers 1 through 30. Those represent years. The MMD has a different interest rate for every year. And so the gray bars, what they represent is the range of interest rates that the MMD has had for each one of those maturities going back to 2005. And the red line represents a AAA MMD as of October 1st, 2021. While this chart looks very similar to many other I've shown you, it is pretty significantly different. And that is, that red line has gone up. It is no longer as close to the bottom of those gray bars as it has been. If you look at year 1, you're probably seeing a 0.13. If you go back 1 week, that was 0.11. You go back 2 weeks, 0.07. If we go to the 10-year maturity, we're currently looking at 1.14. You go back 1 week, that's 1%. You go back 2 weeks, 0.94. So a 20 basis point change in 2 weeks for the 10-year. If you go to 30-year, we're at 1.67. You go back 1 week, we're at 1.59. And 1 week beyond that, 1.53. So we've seen a lift off of those lowest levels. Now, we still are at very, very low levels. The fact that 30-year money can be borrowed at 1.67 for a AAA credit, according to the MMD, that is a very low level, but it is higher than what we've been looking at recently. So on our next chart are the yield curves, and I picked 5 years ago, 1 year ago, and current. 5-year, that red line, you can see a relative curve to that, and I think that's the more typical look. And then that black line represents the MMD 1 year ago, and pretty flat. But then look at that green line. It's lifted off of that black line for years basically 2 through about year 10. So investors are saying, and we're going to require more return for years 1 through 10. But then once you get beyond year 10, it dials back a bit. So the incremental yield for each year is less after year 10. But years 5 through 10, it looks like investors are becoming much more price sensitive than they have been in recent year or so. So that's worth watching. Now, one thing that may happen is years 11 through 30 lift off too, and we just see a higher yield curve overall, or we might see something different that we should monitor. So this is a chart now that while it may have looked a bit boring for several months, this is one now that is a very relevant chart to monitor. So I cut out a slide in here, and that is the supply in the municipal bond market. Monies continue to flow in. I've shown you that for almost every week except for when we had the COVID-19 shutdown, and that's when money flowed out. But what I've also shown you for most of 21 is a lower level of volume than the last year or so. And these lines have the 19, 20, and 21 average weekly volume. Hopefully what you're noticing is those bar charts are over it the last 4 weeks. So that's 4 weeks where we're exceeding 2020 and 2021 average volume. So while we still have demand for bonds, we have a lot more supply of bonds than we've had recently. This is one factor that's likely putting some upward pressure on interest rates, is that there's a lot of supply and a lot of different options for investors in this market. We'll want to continue to monitor this for the rest of the year to see if that supply continues at the levels that it has recently. So this is a chart that I thought was really important, and one of the reasons why we did the MMU updated last week, and that was this area towards the right hand of the graph. You can see that the 10-year Treasury went up in a pretty quick fashion. So when the Fed was talking about easing some of their asset purchases, the interest rates lifted up very quickly for Treasuries. But at first, the AAA MMD didn't track it. It was lagging. But that was one thing we wanted to take a look at, to see, would the MMD track the Treasuries like they did when we did the last MMU updated over here. So it did. So now the MMD, the 10-year MMD has lifted, and that we have higher rates, a lot like the US Treasuries did. Now, one thing that's been interesting since that recording is that now the 10-year Treasury has drifted lower a bit, and we'll have to see if that continues and then what impact that will have on municipals. But really, this was the chart that made us want to do that recording last week. And sure enough, the MMD did move upward a lot like US Treasuries did. So economic data coming up, certainly things to monitor. We've talked a bit about this. If they come in better than expected or worse than expected, will certainly have an impact on the market. But this is what we believe investors will be watching. So our last slide here is the Fieldman Rolapp Associates Registered Municipal Advisors. Encourage you to reach out to any one of our team members. They're very knowledgeable of the municipal bond market, but also municipal finance in general. Thank you for your time, and I'll see you in 2 weeks.